Hello and welcome to BQ Prime. It's a rainy Tuesday morning and we're in the middle of earnings season. The earnings season continues and we're catching up with PNB Housing Finance today. Now, PNB Housing Finance reported its results yesterday, and the company saw its profits rise by 48% year on year to rupees 347 crore. We're joined by Mr. Girish Kousgi, MD and CEO at PNB Housing Finance. Thank you so much for joining us today morning, sir. I want to start off with the rights issue itself, sir. You concluded a rights issue of about 2,500 crores in May 2023. You've mentioned that the money will be used for some strategic growth plans in the investor presentation. Could you give us a little more insight on what those growth plans are?
Good morning. No, we had a very ambitious growth plan, and rights issue was utilized, and this little bit left, which we utilized for business purpose. So total rights amount was about 2,500 crores. And if you look at a quarter one disbursement, it's much more than that.
Right.
So since we did rights issue middle of the quarter, we have utilized rights proceeds towards business growth. I think this quarter will be exhausting that. So entire rights proceeds is for business growth. I think that was the plan, and we're going to do that.
Okay, so you've completed that fund, almost completed the usage of those funds, and you plan to finish them off by the second quarter?
Yeah, almost completed, yes.
Okay, understood. So as a follow-on, because you have growth aspirations to continue, do you have any further plans of capital raising or any of other rights issues coming up?
No, today if you look at our capital adequacy, it is 30%.
Yeah.
So we are pretty comfortable. Actually, it's very high, and therefore we want to utilize this, to grow at a much faster pace. Industry will grow at about maybe 13-14% for next couple of years, and we want to grow at about 17 to 18%. And we have launched affordable segment as well. So I think both prime and affordable would be together will be able to grow at about 17-18%.
I want to come to affordable housing in a second, sir, but since we're talking about growth here, I also noticed that there has been notable degrowth in the corporate loan book. I know it's part of the overall realignment that's going on at PNB Housing Finance, but just to get some guidance from you, do you expect this degrowth to continue through this financial year, or should we expect to see some growth pick up in the second half of the financial year?
I think corporate book degrowth was as per plan. So it was a conscious call. We wanted to degrow the corporate book. Since we saw stress in the corporate book, I think now it is more or less sorted because we just have now 856 GNPA in terms of amount, and we have only two accounts. Out of two accounts, one account constitutes to about 92%, and that is backed by one leading developer. So I think to that extent we are pretty much sorted. Yes, the book will degrow for next few quarters. And we will think of starting in next few quarters. We are not in a hurry; it might take few quarters. But as of now, the plan is only to grow our retail book within retail, both prime and affordable.
Okay, and whenever you do restart the corporate book itself, now any growth aspirations that you're already plotting in? I know growing too fast in the corporate segment can be a hazardous task, and you said you're not in too much of a hurry anyway. But any projections that you're thinking about that this is the rate the corporate book should grow at, given the new strategy?
I think whenever we grow and at its peak, it would always be less than 10% in the overall portfolio. Number one.
Okay.
Number two, when we do, we would be pretty much focused on only construction finance. We would not do any other funding like balance sheet funding. So we would focus on select developers in select locations, and the ticket size would be in the range of about 125 to 150 crores. So this is our plan. So whenever we start, we're going to stick to basics, even in the corporate funding space. We are not pretty aggressive in terms of growing the book. So after we start, probably in 3 years' time, it might reach about 7 to 8% of the then overall book at an enterprise level. But it is few quarters away from now.
Okay, understood. I want to talk about the net interest margins here for a second as well. Now, they were at 3.73 in the final quarter of FY23. In the first quarter, we've seen them come up to 3.86. Any future-looking guidance you can give us on here, or is this going to be a zigzag path where you see some pressure here and then maybe some rebound later on?
In the long run, on a steady state, we'll be able to maintain NIM upwards of 3.5%.
Okay.
For quarter one, it was 3.86. I think this around 3.6, 3.7, 3.7, it might continue for next few quarters. But we'll be able to maintain what we have guided. That is NIM of 3.5 and above, and spread of 2.5%.
Okay, understood. Speaking about the affordable housing segment here for a second, because you've launched it, you're growing it as well. I want to understand from you what you're seeing from developers on that level. Do they expect the momentum in the real estate cycle to continue for a few years, or are they being a little more cautious with the sort of feedback that they're giving you?
So, in fact, real estate space is doing well.
Okay.
It is doing well in all the segments, both on prime and affordable.
Okay.
But given the definition of affordable, barring few locations, where there is a apartment culture, I think to a large extent, you will be focusing on independent houses and self-construction. Because when we talk about affordable, though there is potential in metros and top cities, there is also equal potential in tier 2, 3, and 4 kind of cities where the flat culture is not really caught up. So to that extent, in terms of the mix, maybe apartment would be about 30 to 35%.
Okay.
This is the right mix for any affordable company. But this segment is doing well. So developer segment, whether it is in prime or affordable, given the mix what it is, it's doing pretty well.
Okay. If I could just double click on that for a second, apartment cultures, as you said, are not as well developed. The ones that you're seeing develop, are they, I don't know, 2 BHKs, 3 BHKs, are they larger homes or smaller homes in the affordable housing category?
I think for us, we just started affordable business just about a few months back. But I've been tracking this industry for a very, very long time. So I think going by that experience, typically when we talk about affordable, we talk about ticket size of about, let's say, 18, 20 lakhs. And today there are many companies, which are focused on this space. And we see a lot of potential in this space, both from developer and non-developer. When I talk about non-developer, it is basically construction, resale. And from this developer segment, the property cost would be about anywhere between 30 to 35, 38 lakhs.
Okay.
And on that, the loan could be about, let's say, between 20 to 22 lakhs. So I think this space is very, very potential. We see that there's equal amount of opportunity, both on affordable as well as prime. However, the mix could be different.
Okay, understood. In the prime segment, my question is around the fact that now, given that we're a typically younger country, but yet again, home borrowers tend to be on the older side of the age spectrum, are you seeing a shift there where more younger people are coming to the market, trying to build their own homes or buying their own homes across cities, not just metros?
Oh, actually, if you look at a few decades back, I think home was the last asset to be owned.
Yeah.
So first, typically, if you see, somebody would want to start with a personal loan, that is small ticket personal loan, then graduate to slightly large ticket personal loan, then a two-wheeler, then a car probably, and then the house. But I think there is a huge change in there is a shift in the trend. In last 10 to 15 years, we've seen this shift in trend where now generally, once anyone gets into employment at a very young age, let's say about 27, 28 years, they want to first buy a car and then own a home. So I think we've seen that shift. I think younger population are now looking to own a home at a much faster, pace, much early in their entire career. So that shift we have seen. And obviously, if you look at India, I think in next few years we'll have more, people getting into employment or into business. So that would unfold a lot of opportunity in this space.
Okay, I was just asking, can you tell us the age difference that you're observing? For example, if the mean age was 35 years at one point, what is it now?
So if you look at maybe 15 years back, 20 years back, somebody would venture into owning a home, around 38, 39 years plus.
Okay.
So now we've seen that trend is, from 25 years it starts. Okay. So there is a shift from 38 plus years to about 25 plus years. So very clearly we can see that gap of about 12 to 13 years in advance.
Right, that's a pronounced gap, no doubt. All right, Mr. Kousgi, thank you so much for joining us today and discussing your earnings and the overall industry as well. It was really great chatting with you, and thank you so much all. Thank you all for watching as well.